Hello and welcome to From No Crypto to No Crypto. This is the Crypto Coach, Blockchain Wayne, with another cryptocurrency podcast. Today's episode brought to us by Concierge Club, mobile private key wallet, and point of sale solution, helping to make crypto safe, easy, and overall process more efficient while costing less, helping to take crypto mainstream. All right, so today we want to talk about the topics of DYOR. And what does DYOR stand for? Do your own research. You've got to remember, in this cryptocurrency world, whatever money you invest in a project, in a crypto coin, crypto token, you have 100% full responsibility to it, right? Doesn't matter what some social media influencer said on his wall was going to be big, right? It doesn't matter what John McAfee said from wherever he's running in the world today, what he said about a project. Doesn't matter. Right? It doesn't matter. Even if some, finance gurus come out and say this is a solid project, you still got to do your own research. That may add a little bit more credibility to what you're thinking, but at the end of the day, you have 100% responsibility. Let's face it, this is, when it comes to companies and projects, this is no different than any other industry, any other business model, where even solid development teams, solid employees, solid companies, solid projects, they can still fail. They can whether it's poor marketing, lack of implementation, whatever the case may be, you can have a solid project that's gold and it could just fail. And there's another project that could be crap, and because certain other things, it could rise up to whatever. So you've got to really start with yourself and really understand that when you go into, whether it's crypto Twitter or Facebook groups or any other forum that you're talking about crypto or asking about projects, that at the end of the day, it's your decision. You have 100% responsibility. And it's very risky right now because, let's face it, even the solid projects that I would say from the research I've done, even most of those are down 85, 90% from where they were at their all-time high because of the bear market that crypto has been in. And let's face it, Bitcoin has really been the only one to really bust out of that bear market. And the other altcoins have just really been pummeled lately because they haven't really seen a turnaround. A lot of people, use the term alt season's coming, or when is alt season. Now, altcoin is any coin other than Bitcoin. And when people say alt season, that's typically when we see altcoins make, 5x, 10x, 20x, because they're so low that if something, say 5, 10 cents and it goes up to $1, that's huge gains you're looking at. But there could never be an alt season again. There could just be certain solid projects that have organic growth over time, and you've got to be okay with that if you're going to put your money in a project. So a couple of tips I like to put out there. A couple of websites you can utilize to do your research. So I would start with CoinCheckup.com or CoinMarketCap.com. The reason I mention those is not because, most people may have heard of those because you can go and look at the price of all the cryptos. This is not necessarily about price action. Doesn't matter what it did the last 7 days, last 1 day, the last 24 hours, whatever the case is, it doesn't matter. What matters is what's going on with the project, right? What kind of implementation use is it getting? Because I can take a shit coin that's worthless and has very little volume on an exchange, and I can pump the price up a little bit with a few dollars, right? You can create some buy orders, create some momentum, and a lot of people can get caught off guard if they just go off a price action, because there's certain people, there's certain bad players in the space that facilitate things called a pump and dump. They will target a particular coin or token that has a low trading volume daily, and they'll be able to create buy or sell orders to manipulate the price one way or another, typically up, and they pump the price up, and other people see that it's pumping and they start buying, not realizing it's a pump and dump. And then the organizers would typically dump at the top on people that are still buying. And then it comes crashing down to where either the price crashes or it gets to the point where, hey, the price may stay up there. But at the same time, if there's no liquidity, you can't sell it, right? For you to sell, someone else has to buy. And that's just how markets work. So that can happen. So you want to go to CoinMarketCap, CoinCheckup, and look at what the project has on it. Now, what I like about, and I'll go CoinCheckup because I use that one more than CoinMarketCap, but they both have it, is it will, if you go to resources, say you click on a particular crypto that you're interested in finding out more about, you can click on it, What I like about CoinCheckup is when you go to resources, if there's a video available explaining that project, they'll do that. Now let's face it, we're a visual, we're more visual than anything, right? We can read all day or read a white paper, but at least a video can give you a start to understanding what it's designed for, right? Then you can dig in. You can click on the project's website. You can go to the website. There's also a link to the white paper. And you can do that. Now, white paper isn't the gold standard, right? It's not like, okay, they got a white paper. That's just so you understand what the project is. And then start looking at, in that website, you should be able to see the development team. And make sure they're legitimate. Make sure to check out some of them. And let's face it, if there's 15 people listed on the website and the development team from various positions from CEO on down, and none of them have an established presence on, like, say, LinkedIn or something, it might not be a legit project. It's possible, right? So, not saying, again, that's not saying it's the gold standard, but just like as you learn trading, you're looking for multiple indicators on a chart. You're not going to go off of one indicator. When it comes to investing, you're not going to go off of one piece of information. You're building the case of either why or why not. Should I look at this? Should I dig more into this? Should I invest time before I invest my money, right? And that's where it comes in. So some people will ask on Facebook about a certain project or a certain crypto, and they'll just say, hey, what does everyone think about this? And a lot of people that understand how to research the project and know what it takes to go into trying to figure that out will comment DYOR, right? Do your own research. And that's why I started off the podcast with this, because it's not to be rude. Now, at certain points, some people will get sharp because it happens all the time. And what happens online, we also get offline as well, because when friends find out what's going on with crypto, they'll just throw out these projects what they think are quote-unquote cheap, not even understand supply, and I'll get into that in a second, not even understand what supply is, and they just want you to tell you about it. They don't want to do any research. They just want to know, what can you tell me about it, and should I put some money in it, right? And that is taking the responsibility that you have, and you're trying to shift it onto someone else. Because if you say, yeah, I've looked at it as a solid project, and guess what, that project tanks, and you end up holding a bag of crap, then most people want to blame the person that told them, yeah, it was a good investment, but really at the end of the day, it really falls back down on you. So when you're looking at crypto from an investment standpoint and you're looking at value, then that's what it is. If you believe in the long term of the project, then it shouldn't matter what the price does day to day, unless your intention is to sell or trade to be able to accumulate more. Then you worry about the price. But if it's not the case, then don't, right? So go to CoinMarketCap, CoinCheckup. They also link you to all the forums, right? Whether they're in Telegram or Reddit or any other forums that particular project team may have, it's going to link you back to those to where you can do some more research. Now let's face it, we're in the age where we got communication overload, and there's not really a lot of great platforms out there. But a lot of the projects will have either a Reddit thread, Telegram thread. Even though I'm not that big on Telegram, they'll have a Telegram thread, or they could even have a Discord thread, right? So, which I like Discord because you can take one community and divide it into different subcategories and talk about different things. Because if you're getting into technical stuff with people that are in the coding and wanting to know more about the technical side of a project, you can have that conversation. If people just want to know layman terms, hey, what does this do and why should I care? Then that's the other case, right? So the other thing you do, you can check news space. You can check whether it's CoinDesk or Cointelegraph.com. Those two are, say, fairly decent news sources. And I say that with some hesitation because I haven't really seen some really solid news sites yet for crypto, but those two are really the best that are out there. One thing I like about Cointelegraph is if they have an article that is like a sponsored article, like basically the company paid them to publish their own article, then they'll signify it as that versus trying to pass it off as regular news when it's really someone at the company wrote about it trying to hype it up. That's where a lot of people get wrong. So you want to get all these bits and pieces of information and then see, does it line up, right? Does it? And the other thing, they can throw around a lot of flashy words and different things, but does it solve a real world problem that can't be achieved without blockchain or cryptocurrency? If it doesn't do that, then what's the point, right? I can create a token for a specific industry, but if it doesn't solve a problem, then what really is the point? Now, there are some legitimate problems, right? And then the other thing is you've got to look at is what is the supply, right? How many tokens are there outstanding? Is it mineable? Is it pre-mined? And then what is the current supply, and what's going to be the total supply when everything's mined, or if it's pre-mined, what's the total supply? That's why people will look at one crypto that's I'll not name any names here, but they'll look at one that's like 30 cents, and they'll look at another one that's $10,000, and they're like, well, hell, if this one that's 30 cents even gets to half of what that one is, I'll make millions. It's not how it works, right? That one token may have, the one that's $10,000 per coin may only have 21 million that's going to be total circulation, and the one that's 30 cents may have 100 billion that's in circulation. It just dilutes the water. It's not the same thing. You're not comparing apples to apples, and it's not really cheap. There's just more shares, which is why some cryptos may be towards the top of the market cap, but you see their price is extremely low, and your average person sees and thinks it's cheap. You know, one thing I get every time the market heats up, I get calls from people about Ripple, right? XRP, look at it, it's number 3, and it's only 31 cents or 30 cents, or I think right now it's 27 cents as of the time of this recording. But it's cheap. It's not cheap, right? It's got a huge supply, right? And use case isn't necessarily always going to determine price either. That's why, you know, stable coins. They can create stable coins every day, and I'll say quote unquote stable coins because they're pegged to fiat currency, which is steadily declining, but have a stable coin, right? You can have millions and billions of them, right? So that doesn't necessarily dictate the price movement. So what's going to dictate price movement? We live in a free market. What's going to dictate the end all be all price as we go is really the supply and the demand. How big is the demand for it versus the supply? That's why, you know, that's why these financial experts have come on that are pro Bitcoin and say they see Bitcoin going to 20,000, 50,000. Even Tim Draper, billionaire venture capitalist, has said 250,000 by 2023. Right? How can he throw out that outrageous claim? Because he understands that only a fraction of the world is really seeking and looking to own Bitcoin right now. But whenever, you know, more people move towards it, there's only 17 million in circulation. There's only going to be 21 million total that are ever going to be pre-mined, that are ever going to be not pre-mined, that are ever going to be mined. So just the law of supply and demand, and also understanding what's also happening on the opposite end with the US dollar and any other government's fiat currencies, where they're steadily experiencing inflation, and a few major issues in the economy can rapidly accelerate that inflation, right? So you're seeing in countries where China and Argentina are seeing huge Bitcoin purchases because their currency just recently, in the last week or two, has experienced some massive inflation. So that's where you understand both those ends of the cycle, and that's how you can get that price demand. Because Bitcoin, for instance, is divisible 8 places behind the decimal point. So that means that even if one Bitcoin is 250,000 and I want to send you a few dollars worth of Bitcoin, I can still do it. Now, will it ever be a mass payment system? That's debatable. Maybe not. You know, it may not be like a Visa for micro payments where you're paying $1 here, $1 there. But let's face it, someone can move millions to you know, from one place to another without the need of a bank. And banks, which will charge even on 1 to 2% on that, they're paying $20,000, $30,000 just to move money, you know, money that from one place to another that can be achieved without the need for that bank. That's the big case. Now, whether Bitcoin can really knock out you know, the Lightning Network, which could speed up and make it be used for micropayments, but that's not the case. There may be something else utilized for that, right? There may be a few that'll have their use case, but just realize that of the 2,400 coins that are on CoinMarketCap or CoinCheckup, there's only a handful I can say that I think are really gonna amount to anything. And honestly, there could be some really great technology that blows a lot of them away, and guess what? They may not even have been created yet, right? That coin or that token or that particular technology hasn't even been created yet and put on the blockchain or created a cryptocurrency around it. So there you go. And then you know, I see this whole splintering it off, because NFTs, non-fungible tokens, can also be huge when it comes to cryptocurrency. I was a big collector of baseball cards and baseball, football, basketball cards growing up. So I love the collectible space. I imagine the digital collectibles, right? You can have something that's limited edition, that's rare, that you don't have to store in a plastic case or a book or a binder to protect it. You can store it digitally on a wallet, and you can trade it with friends. I mean, come on, that is huge. And then also NFTs are going to be used big time when it comes to in games, whether there could be whether in-game currency or in-game different objects or items or things that you can purchase that can be tradable, that can have value just like anything else, right? If I pay, say, $10 for some kind of sword within a game, and then I have a friend that wants to give me $12 for it, I can sell it to him. I can trade it, right? That's what NFTs are going to allow you to do. And then also, utility tokens that are going to be utilized to give you access to certain things or utilize different functions. There's so many different things. And then you're looking at tokenized assets, right? We saw it recently in New York where a particular real estate building was tokenized, and those tokens were sold, and each token represented a share in that building, a share in the revenue. And that's just one example, but that just shows you how big this thing could be, because without having to go through all these different processes and different middlemen and to handle that, I mean, I can see how the stock market itself can be completely revolutionized, where when you hold a stock, you may actually hold a tokenized certificate on the blockchain that signifies your ownership, versus you're just hoping that your E-Trade or Scottrade, the numbers in that computer are right, because it's not really backed up by any kind of blockchain. You never get the stock certificates when you buy stock. So maybe we'll see that change as well. So just be prepared, understand what it is. This is a long-term game. We are still in the infancy when it comes to cryptocurrency. I know Bitcoin's 10 years old, but guys, we've just begun, right? This is just getting started. Industries and governments are just starting to talk about crypto and Bitcoin and blockchain. And so it's super early. We're going to see this thing evolve. And at the end of the day, it's about freedom, and it's about eliminating the abuse of power that some, whether it's governments or corporations or banks, have taken. Cryptocurrency takes our trust from those people that have violated it and puts it into the math, the cryptography that builds a blockchain and creates cryptocurrency, and allows us to have freedom to where if I want to transact with anybody else, for a good, like I want to pay you for something, I don't need a bank to verify my funds or say it's okay, or they, for some reason, even though I'm not, think I may be buying something or doing some kind of business with my bank account that's not on the up and up. So without any kind of proof or evidence, they can freeze your money, right? That's not going to happen. You're not going to freeze Bitcoin, right? So you heard it, in the Congress hearings recently, where they asked, can Bitcoin be killed? And absolutely not, it can't be, right? The price can be suppressed and manipulated for a certain amount of time, and that's with any crypto. But in the long term, it can't be stopped, it can't be killed, and eventually the free market's going to determine the price, because you can only manipulate and suppress it so much before it breaks through and gets some stability. And really, starts to see that growth that can happen. So that's it for today's episode. I really just wanted to touch on that. So make sure, if you hear someone say DYOR, before you decide to just take random Joe Blow's recommendation from a podcast or from a YouTube video or someone that's famous, social media influencer or something like that, telling you about a certain crypto project, do your own research. Find out if it's legit. Don't be afraid to reach out, but don't reach out to someone for advice unless you've already done some of the homework yourself, and you can maybe explain what you've looked at already. Because that's one thing that I don't mind helping somebody if they've already dug in and told me what they find. But if somebody just calls and they want me to be the one to do the research, time's too valuable for that. So that's it for today's episode. I want to thank you for listening in, and we will catch you on the next episode.